Crypto sector surpasses $4T mark as market booms amid regulatory shifts. Imagine a financial landscape transformed overnight, where the value of cryptocurrencies collectively surpassed $4 trillion. A staggering milestone that signals a major shift in the global investment arena. But here's where it gets controversial. Is this surge sustainable or just another bubble waiting to burst? This pivotal week saw the crypto sector reach a landmark valuation, reflecting its evolution from a speculative niche to a cornerstone of modern finance. A key driver of this growth has been Bitcoin's recent ascent above the $120,000 threshold, a record high that sets the stage for even greater heights. Analysts are optimistic, predicting Bitcoin could touch $200,000 by year-end, a forecast that could spark debate among investors. Amidst this optimism, lawmakers are stepping in with regulatory clarity. The U.S. House of Representatives passed a bill to establish a regulatory framework for stablecoins, cryptocurrencies pegged to traditional fiat currencies like the dollar. This move, championed by President Donald Trump, marks a significant shift in government's stance toward the crypto industry. But legislators are still being cautious, passing two additional bills, one for broader crypto regulation and another proposing a ban on the issuance of a central bank digital currency by the U.S. These legislative actions underscore how far the crypto industry has come since its speculative beginnings. Institutional investors are increasingly warming to the idea of digital assets, allocating portions of their portfolios to Bitcoin and other cryptos. New exchange-traded products are entering the market, and corporate users are adopting cryptocurrencies as a means of storing value and facilitating transactions. Stablecoins, in particular, are gaining traction. Designed to maintain a constant value, often tied to the US dollar, these tokens are becoming essential tools for crypto traders looking to move funds between different digital assets. Advocates argue that stablecoins could revolutionize payment systems by enabling instant transfers. The passage of this legislation will be remembered as a crucial step in legitimizing crypto as a legitimate asset class, commented Chris Perkins, president of CoinFund. It represents a bridge between traditional finance and the emerging world of blockchain technology. Corporate treasury strategies are also evolving, with more public companies integrating Bitcoin into their balance sheets as a long-term investment. This trend highlights the growing acceptance of cryptocurrencies as serious financial instruments. The crypto rally has had a ripple effect on related stocks. Platforms like Coinbase and Robinhood saw their shares hit all-time highs, benefiting from increased activity in the crypto market. Ether, the second-largest cryptocurrency, has more than doubled in value over the past 3 months, fueling further gains in crypto-linked equities. As we look ahead, the question remains: how will regulators continue to shape the crypto landscape? Will the industry continue to grow or face new challenges? These are the types of questions that keep investors on edge and spark lively discussions in financial circles. In conclusion, the crypto sector's breach of the $4 trillion valuation threshold is more than just a number. It's a testament to the transformative power of blockchain technology. And this is the part most people miss. The journey is far from over, and the future of finance is likely to be shaped by the ongoing evolution of digital assets. Crypto Week ends on a high note. What's next for regulation and adoption? Crypto Week has wrapped up with a bang, leaving experts buzzing about the future. The passage of the Genius Act has brought much-needed regulatory clarity, but industry insiders insist this is only the beginning of a much larger journey. Imagine a world where crypto isn't just a niche interest but a cornerstone of global finance. That's the vision experts are painting. Leo Fan, co-founder of CISIC, emphasized that while regulatory clarity is a crucial starting point, it's far from the finish line. Clarity is just a starting point, not an endpoint, Fan told Cointelegraph. He highlighted the need for scalable blockchains, instant verification systems, and trusted custody solutions to drive further integration. For instance, think of blockchain technology as the foundation of a house. You need more than just the base to build something truly remarkable. Fan praised Crypto Week for delivering legal clarity, particularly with the Genius Act recognizing that not all crypto assets are securities. This, he said, is a foundational shift that gives developers, investors, and institutions the green light to innovate with clearer legal guidelines. But here's where it gets controversial. Some argue that this clarity benefits big players more than everyday investors. Fan also noted that crypto is finally being recognized as foundational infrastructure, paving the way for real-world integration in finance, identity, and privacy systems. With the legal groundwork forming, the path is clearer for real-world integration, he said. Imagine being able to use crypto for everyday transactions as seamlessly as you use cash or credit cards today. Alton Tudor, co-founder and CEO of More Markets, described the Genius Act as the best sign yet that DeFi is here to stay. He pointed out that the U.S. is closing the gap with Asia in crypto adoption. Tudor believes the legislation will drive stablecoin adoption in a meaningful way, enabling traditional assets like gold or oil to be tokenized and bringing DeFi into new territories. And this is the part most people miss. The potential for tokenizing real-world assets could revolutionize how we think about ownership and investment. However, Tudor cautioned that regulatory clarity benefits institutions more than everyday investors. He stressed the importance of building payment systems, apps, and earning opportunities for retail investors to avoid a dot-com bubble scenario in the crypto world. Ryan Chow, CEO of Solve Protocol, echoed similar sentiments, stating that Crypto Week laid the legal foundation for digital assets for legal clarity and structural legitimacy. He called the Genius Act's distinction between decentralized digital assets and traditional securities monumental, giving builders and investors the confidence to innovate. Looking ahead, Chow said, "Clarity is necessary, but credibility is what builds markets." He urged the development of Bitcoin-backed credit, tokenized treasuries, and yield tied to real assets with transparent risk pricing and compliance built in from the start. But what if this push for credibility leads to overregulation? Could too much control stifle the very innovation it aims to foster? Will K., CEO of VOI and co-founder of Symbiosis Finance, highlighted that regulation alone isn't enough. He emphasized the need for mature infrastructure, simplified user experiences, and AI-driven tools that level the playing field. Without these, crypto risks remaining a niche ecosystem rather than a global financial standard. The industry needs to stop building for crypto natives and start building for everyone else, Will warned. Passed last week with more than 300 House votes, including support from 102 Democrats, the guiding and establishing national innovation for U.S. stablecoins, Genius Act establishes the first federal framework for stablecoins. But will this framework be enough to propel crypto into the mainstream, or will it face unforeseen challenges? So what do you think? Is the Genius Act a game changer for crypto, or is it just the first step in a long and winding road? Share your thoughts in the comments. We'd love to hear your perspective. ***.